What's up, my fellow traders? Hope you all having an awesome weekend. So a weekend update and something educational for you so that it will help you to take efficient trading decisions. That is why every weekend I try to teach you some important stuff in regards with your trading, in regards with taking your efficient trading decisions, in regard with some trade management, some zones we've been looking at throughout the week, how we enter the trades, how we exit, how we cope with the emotions when we have some sort of losing streak. And talking about losing streak, I do have some 3 to 4 losing trades in a row, and then how I cope with my emotion, and I still entered my trade every time when I see a condition. So that is what I want to show you in this video. I want to show you the live running trade which is still on. I'm also going to show you the trade which I've taken and how I managed that trade with 2 entries, or I entered my trade with 2 positions. How I managed that, I've already recorded that for you guys so that you can see that it is something running on my live account and how it affected my emotions, how I managed those trades. And then we're going to do analysis of nat gas, gold, silver, and crude oil. So straight away jump on to this trade right here that was sent to my members. Now, when I say manage your trades, exit or manage your trades means either you want to manage your trades to the next level of resistance from where the price can likely to react, or exit is totally up to you. In my case, what I do, if I place my trade, let's say 2% of risk, I split my risk with 1% each trade, or I split my risk with 0.50% and 1.5% on the other one, which is the bigger trade. So that is how I manage my trades. Now, this was the trade alert sent to my members. Right here, as you can see, we entered this trade, but I personally entered 2 trades, one with a very low risk. Now it is something for you guys just to show you an example. I take different amount of lot sizes in my other account, but it is something for you, for the YouTube audience, so that I can show you how I personally take these trades in my real accounts as well. Now let me show you the clip where I'm managing this trade live. Now I just want to show you this live running trade on my live and a real account. As you can see, the IC market account has been connected. I'm on the IC market portal, and as you can see, all of these instruments are connected with IC markets. Now the way I manage this trade, I opened 2 trades, one with just a 0.3% of risk and one is with 1.5% of the risk. So I split my risk because for the one trade I want to exit right here. The target has been hit. I'm going to cut it off in a second, but the second trade, the target is right here. It's almost about to hit. Perfect. So as you can see, the trade was running live, and the reason I've managed my trade, this one, to the bigger targets, because it is a level of resistance here on 4-hour time frame. I'm still looking at a bigger time frame. It can still be managed to this level, but I decided to, it's my own decision, I decided to exit my trades right here. And if you look back, it is a level that has been reacted dramatically in the past. Now I want to show you that trade which was running in my live account here in IC markets, and right here, as you can see, both of my trades hit profit right here and right here, that both target has been hit. Now I did not came out in a break even, but instead this trade was cut automatically right when the take profit was hit, but this trade was still running with the same amount of stop loss. So either you can just move your stop loss to break even or manage it. In that case, you would come out in break even. But the benefit of opening 2 trades is that one trade you can close and then you can have that money in your account and let the second trade run with the exact same stop loss but with a good reward to risk ratio. And right here, this trade keep on running and we had a nice take profit hit. So that is how you can also manage your trades. I still have one more trade running which we're going to come back in a very short while. Now I'm going to show you some commodities, the trades we took. But before that, let me show you a very popular pair, which is EUR USD. Right. It was something I was going to send you as a trade alert to my members, but I was already late. But if you are someone who is a member and follow me from a couple of months in the priority group, it is something I have already mentioned to you in the report and also in a live session. But let me show you the report first. Right here, this report was sent on 21st of October, and this zone was sent with that as well, that I'll be looking to enter my buy trades within this zone. That is why I say my group is not a signal group where you get tons of signals, but it is an educational group where you get the zones, where you get yourself prepared when the price is inside of your zones. And once the price is inside of your zones, we are just looking for buying condition. That is all you need to look. Not every trade will send as a signal, but if you just join my group for signals, then you might be picking up my losing trade. But on the other hand, you are getting these nice entries on here on Forex, commodities, indices, which is what I'm going to show you in a very short while. But the report was sent, and then in a members only live session, let me show you the clip from that as well. We are still in the level of support. I'm just waiting for the possible double bottom pattern. So I'll keep myself prepared. That is not one of my valid bullish engulfing entry. In case you're wondering, I'm still looking at my zone here for the possible buy entry. So either you're going to enter from here with green candle or bullish engulfer or a pin bar. You're still bearish right here with bearish engulfer. You can still expect some pullbacks and then a continuation. Awesome. So you see, first we were prepared to take our entries from this area, and then the members only live session, we were prepared for the possible bullish double bottom. Now, I've clearly mentioned that we have a bearish engulfer that also pushed down, hitting the targets if you were to enter bearish trade for the short term. But we were prepared for the green candle for the double bottoms, bullish engulfers or pin bar, but we had a nice double bottom pattern formation. And if you look here, nicely hitting 1.4 to 1 reward to risk ratio target. If you are my student, you know that it is something I take for my counter trades target. Nicely hitting the targets, and as you can see, that is how we can take trades with conditions without any sort of gambling. And similar condition we had here on EURGBP. Now, right here, I have clearly sent this report to my members. Now, if you're my member on that week, then you have received this zone. So let me show you the report that was sent to my members. Right here, EURGBP sent on 30th of September. Clearly mentioned that I'll be looking for the possible buy trades from this zone right here in green. And right here, we had a price hit my zone. What? We have a nice double bottom pattern, clear double bottom right here with this bullish engulfing pattern. Now, it took a while before the price pushed up. And that is what we call patience. We have one more trade. I'm going to show you that was a pain in the ass trade, but it is something I'm going to show you, and that is what we call trading. If you want to make money while you're at home, while you are getting rid of your 9 to 5 or 12-hour shifts job, then all I'm asking about patience and being disciplined. I'm going to show you the losing trades as well, coming to that as well, to the reality, because not everything you see in my videos is winning trades. I want to show you the reality of trading as well. But again, at the end of the year, we are profitable. I'm going to show you the results in a second. Now, let me show you the clip from a live session as well. With that, we had the zone sent, and I'll come back to you very shortly. Your GBP zone was sent to you earlier, nicely pushing up, and the target looks something like this. I'm expecting a further push up to these targets, and you can also manage to 1.4 to 1 reward to risk ratio. Awesome. So that is what we call trading with patience. We had a nice double bottom that was sent in the report to look for your entry condition. Now, if you're really serious about trading, you are just looking at my analysis seriously. If you're not looking at my analysis, or you're not watching me on YouTube or in my members only live session, then there is no point of paying me for anything. I only ask you to look for this condition and learn from that. At the time when I'm talking about these conditions, it might looks like, or it might feels like, at that time you say, oh, if the price is going to come back, I'll see if the price is going to come back. But in that process, why not just do some gambling? Why not just capture some pips? In that process, you just lose everything. Instead, if you have waited for a couple of days, waited for the price to form and give you a pattern, then this is what you get, a reward. Right here, 1.421 targets has been hit. You see how nicely these patterns are working. And let me show you some commodities that we are paying attention in since last week that was sent in the report as well. Right here, talking about palladium. Let me show you the report that was sent to my members. Right here, the palladium report was sent to the members. That price is now heading towards a level of major resistance, from where we're going to start to look for the bearish trades only with conditions. Now, for me, the condition did not form on 4 hour, but if you're someone looking at on 1 hour time frame, there are multiple entries on 1 hour time frame. I'm going to show you that next as well. But move back to 1 hour time frame. What do you see? A nice bearish engulfing pattern. It is my aggressive entry. If you're my student, you know what entry I'm talking about. And all the way from resistance all the way to the level of support, we had a massive waterfall. Now, if you don't know where to sell, you will be just entering blind trades. Looking at this pattern, you say, yes, this is the double top pattern. You look back, if you mark your horizontal line, something like this, you look back and you say, yeah, it is a level of resistance from where the price has acted as a level of support and resistance. You started selling. But for me, the rules are different. My level of resistance was a bit higher, which is right here, and that is all I was looking at. And you see how nicely out of my report, the price pushed lower dramatically. That is what we call patience and taking your trades with conditions. Right here. So I want to show you the trades that happens on 1 hour time frame and how powerful my strategy goes with 1 hour time frame, especially on this pair, which is EUR USD. If you are someone who is actively doing my course, it's worth checking EUR USD on 1 hour time frame. Right here, I want to show you just September. Right from 2nd of September, these are my pullback entries. If you are my student, you know all the 6 rules for the pullback entry, bullish and bearish. But in general, we are above 50 EMA taking bullish trades. If you're below 50 EMA, we're taking bearish trades. But with 6 rules must be met. Right here, we have from 2nd of September, 1, 2, if I move forward, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 and 13. 13 trades we took just alone in September, just with a single pair, and out of 13 we have 1 and 2 losing trades. That is how I've been taking the trades on 1 hour. If you want to, if you wish to, my strategies work with every single time frame. All you need to do, just backtest a Pacific pair and see if that pair is performing best, and then add that in your portfolio. That is a simple method of trading, and you have seen the example of September alone on 1 hour time frame till October 23rd. Right here, 13 trades, and it is just with a single pair. Because I get this question a lot, that Omar, what if you're going to take over trades on 1 hour? Yes, there is an example right in front of you, exactly with the rules. This is something I teach every single day, and with the rules in my course as well. Now I don't go below 1 hour time frame. If you are someone to trade on 30 minutes time frame, make sure you backtest that strategy on 30 minutes time frame as well. Now coming back on commodities again. Now I want to show you the losing streak and the mindset when we had those losing streak. Now coming back on my spreadsheet right here, after a good winning streak, let's say all the way from here, I'm counting this a winning streak. We had just 1, 2 and 3 losing streaks. So it is still a winning streak, and after that we had a winning streak. But the last 2 weeks, 1, 2, 3, 4 is a losing streak. This trade is running in a profit, but let's see how it goes in next week. But as you can see, I've entered this trade, I was in a loss. Then we have this trade, profit, and then I have 3 losing trade. Now that happens in a row, and that did not stop me to enter another trade. Right here, that was sent to my members as well. Again, that is why I say it is not a signal group. Make sure you follow the rules, make sure you look at the conditions, and keep on taking the same trade and entries the way you are learning, and use it as an example to take your next trade, and ask me questions that if you are taking the right trades or not in the other market as well. Now right here, Euro AUD, it is now running in my live account. Let me show you. Right here, as you can see, this mark is running. This trade is running. Now I'm going to show you this live running trade. Please do not take this trade. I'm not sure how it's going to go, but if the price hit my take profit, is good. I might manage this trade right till this level of support, which is right here. That could be a good reward to risk ratio, and that is all I'm doing. Now, the reason I'm showing this trade, because this trade happened after 1, 2, 3 losing trade, and I'm in this trade again. I have not given up. I have not increased my risk. It is just a 1.5% of a risk I'm taking. Right here, as you can see, 0.31 lots. That is all I'm taking. It's not I'm doing a revenge trading. If I do a revenge trading on the third trade, I might make money once or twice, but in the end, I will end up blowing up my account, mess up with my head, and keep on increasing my risk, and at the end, I will have nothing left to go for the next trade. You see, after this losing streak, if I was not disciplined, I wouldn't even see this winning streak. Right? We had a winning streak at the start of the year. Then this is the winning streak. So this is something, a part of process. This year is a bit choppy than last year, but still we are up 104% in gains. So that is what you need to understand in trading. Do not increase your risk if you have a losing streak. To stay disciplined, if you are learning from me, if you're learning from someone else, stick with the one strategy. If you have a losing streak, don't change your strategy and don't try to increase your risk. Now let's look at crude oil. A massive moves out of crude oil, and with crude oil, we've been taking some nice badass trades. Now I'm going to show you the reports right here. Now for crude oil, First, we entered sell trade from the level of resistance, which is right up there, as you can see right here. This was sent in the report to my members. Then after the target is hit, I was looking at my level of support, which is right here, the number in green. How nicely the crude oil pushed lower from my resistance with conditions, double top, pushed down to my level of support, double bottom, pushed up. You see how amazing the price action is. From the level of resistance, we have double top. From the level of support, we have double bottom. It is opposite, exactly the same, but all we need is discipline from the level of support, from the level of resistance, supply and demand zone. All we need to identify, that is all. And it is something I've sent last week to my members as well. With a losing streak, we had these trades as well that compensate with your losing streak, and that will increase your ROI. The results I've just shown you is just based on the trade alerts I've sent to the members, not something I've personally taken. For example, I've taken the gold trade, I've not added that as well. I've taken this trade, not added that as well. So that is why I don't support signals. If you just rely yourself on the signals, you will rely on signals throughout all your trading career. You will never want to learn trading and become independent. If you want to become independent, learn the system. And even though after learning the system, you will not become profitable right at the next month after finishing a course or anything you are learning. It will take time. It will take experience. It will take months of backtesting. Once you are done with the process, then you can start implementing your own strategies within the strategy you have learned already. You might become a better trader than me or from your other mentors. But you need to understand the system first to become profitable. You take a degree from the college, you don't get a job straight away. You do internship, you get experience for a year, and then someone hire you for the better position. And trading is all about that as well. It is an easiest way of making money, but it requires a lot of hard work. Without hard work, it is just a gambling. Anyone can do gambling. Anyone. You pick up someone from the street, bring him to casino and ask him to place any game. He might win, but that is just not consistent. Now, Euro-Japanese yen, this was a pain in the ass trade I was talking about. Now, this trade is a perfect example of being patient and disciplined. Now, this was also sent as an alert on 8th of October. That was our entry right here, as you can see on the screens. And I've also emailed my members to manage or exit this trade because we had some major news events and I was getting lots of messages from the members that, Omar, shall we exit or not? But it was a big 116 pips trade. That is why when the price was here, somewhere around 80 pips, I've messaged my members to exit or manage is totally their own decision. But for me, of course, I always manage my trades, especially Japanese yen pairs that trended nicely. And right here, one trade that hit my target after so many days. Here was my entry and it hit my target right after 15 days, 2 weeks of time when the price hit my target. Now you see that this trade was worth waiting. Now right here, first target was this and second target was right here because it was a level of major resistance and I want to manage my trade still here. So I've entered with two targets, one with this one, second with this one, and this was exit at 116 pips and this was gone up to 273 pips. Insane amount of money right here. But I want to show you the roller coaster ride we entered right here. Right here, the price was about to hit my take profit just few pips away. Then we pushed back down in a loss. We pushed back up in a profit few pips away. Then we back down in loss, massive loss. Again, right here, broke below 50 EMA, but I was still disciplined. We pushed back up again. We was near to my stop loss. And that is a time when the patience really plays out and you just want to exit your trade just once the price come back in profit. But I was in a profit again. I was patient enough, not exiting my trade, pull back down. And again, I'm in a loss, but we are in a profit again. Now, most of the traders who are not disciplined, they might cut here after this roller coaster ride and then they would regret this big move. Now, it is something we don't want to do. If you do that, it will hinder the risk to reward ratio and a winning ratio at the end of the year. But you see, after a couple of weeks, the price dramatically pushed up, hitting my profit. But we do have a rejection here again and then dramatically pushed up, hitting 273 pips here, 116 pips here. Altogether, you see, it's more than 400 pips I have gained from this pair. So that is a good example of being patient, disciplined, and controlling your emotions. So in the last part, let me show you the indices, the trades we took out of indices, out of the zones. Now, last week I've sent report to my members and before that as well, right here on US 30 Dow Jones. 1 hour time frame, what do you see? You see a price hit the level of support after a while, forms a double bottom pattern. Now it is something that was sent to the members on 27th of October last week that I'll be looking to enter my trade after the pullback has been completed, and price hit my level of support right at this number that was sent to my members, and right here, what do you see? And again, this was also mentioned in my public live session which I've done just last week. If you have seen that, then you know that I've already mentioned this zone. If you have not seen that, it is still public. You can go and watch that. I've mentioned this zone in my public live session, and you see how nicely the price pushed up from here. A nice move out of 1.5 200 watt to risk ratio, and it is 261 points. That is a good amount of money here on the indices market. And with that, I've also sent Australia 200 index, just got 1-to-1, not more than that, because indices are risky, and that is why it's up to me if I want to go 1-to-1 or 1.4-to-1. For this one, I've just gone 1-to-1, and right here, if you scroll down, Australia 200 index, right here, if you scroll down, Australia 200 index, it was a zone that was sent to my members as well. And as you can see with this nice double bottom pattern, how nicely the price pushed up. So we have other indices we are looking at as well, but we are still waiting for the price to get to the zones to take the next entries. Now, if you would have entered aggressively, again, if you have any question like that, if you are wondering, that would have hit your take profit as well. But double bottom is a less aggressive way to enter, and I like to enter less aggressively on indices and commodities sometime as well. So that is it for indices and commodities, and I hope you have got value out of my first part of the video. I've shared you my experience, I've shown you my live running trades, I've shown you my losses as well. This is something we call trading, and not everyone can become a trader if you are not disciplined, if you're not patient, if you do not have a strong trading psychology, if you're not ready to put hard work in your trading and hard work in your learning. It doesn't matter if you are learning from me. Doesn't matter if you're learning from someone else. Please, if you want to become a trader, it is not impossible. There are people out there. Some of them, they might show their faces. Some of them, they are live on the YouTube. You can do a Google search as well. They are making money. If they can make money, why can't you? But all you need is a hard work, dedication, and passions. With that being said, let's start our analysis with nat gas, gold, silver, and crude oil, starting with natural gas. Now price has dramatically pushed down from the level of resistance right here and broken below the previous anchor. Now we are still bearish at this point. All I'm looking at a bearish engulfing pattern. Now expect a good pullback. Reason I'm saying that, because we are now in the oversold situation. As you can see, every time we have oversold, we see a good push up. This push up is big enough because we were oversold. With that, we were in the level of major support. We have a buy condition. But this oversold doesn't mean the price will reverse from here. For me, this oversold means just a pullback below 50 EMA followed by bearish engulfing pattern. And then I'll be looking for the possible major double bottom pattern. Now, if you have a double bottom at my rejection zone, which is right, this little yellow line, if we have a price push down, forms a bullish engulfer and a nice 382 candle. If you don't know what 382 candle is, the video is in my playlist. The candlestick patterns title is, feel free to check that out. What ATR is, that is also explained in that video. Now, if you have a condition, if you have a buy signal, and we can see a massive push up out of natural gas here as well. Now, again, on a daily time frame, we are still above 50 EMA. If the next candle turns out to be a bullish engulfing pattern, that will still push the price higher, which is likely. That won't be a valid bullish engulfing entry, because that invalidates one of my rule of pullback entry. If you're a student, you know that as well. That is a valid pullback entry, but that won't be a valid pullback entry. But in general, if you have a bullish engulfer, that will push up. Now, looking at the weekly time frame, that is a bullish engulfing pattern, and that is why I'm looking at this weekly engulfing pattern. Now, with a bullish cross, we can start to see a move up on a smaller time frame. Of course, on a bigger time frame, that will take quite a while. But on a smaller time frame, we can still look for the bearish trades for the short term until we are here and we get a buy condition. Now, this zone in green, which is, if you want to mark these zones on the charts, it is right here. 2.505 goes to 2.642. Now, very important, if the price forms a bullish engulfer inside this zone, at double bottom, that is a good entry. If the price pushes down, still in the zone, unless we see a buy condition like bullish engulfers at double bottom, we are not buying. But we can still sell. Let's say we are inside the zone, price pullback from bearish engulfer, we can still sell. Unless and until we see a buy condition inside this zone, we're going to buy. So not buying unless we see a buy condition. It's very simple. For now, buy from here with condition or from this zone, or once we're broken above 20 or 50 EMA, only then we're going to start to buy natural gas. For now, just look for the bearish engulfer below 50 EMA, which is our pullback entry bearish. Here on NEMIX, it's different here. On NEMIX platform, we are still above 50 EMA. Let's see how the price opens above in gap or below in gap. But if you're still above 50 EMA, all I want to see a bullish engulfing pattern above 50 EMA. Let's say we have a red candle goes down and a green candle goes back up. In that case, we will have a valid buy signal, which is a valid pullback entry bullish. Otherwise, if we are broken below 50 EMA, I'll start to look for my bearish trace, bearish engulfers, pullback, bearish entry. So that is all I'm looking at. Very simple. Below 50 EMA, we start to look for the bearish trades. If we are above 50 EMA, we can still see a push up, and I'm still looking at the level above, which is right here for the price to get to if we have a good reaction, a good bullish reaction from here. So buy entry I'm looking at, but with conditions only. Sell trades will only happen once we are below 50 EMA, and then price will likely to push down to this zone. Here on Wanda, we are about to hit a level of support, but I'm going to mark my rejection zone as well, which is my double bottom rejection zone right here. As you can see the numbers in blue. Very simple. Just a bullish engulfer inside the zone or a 382 candle inside the zone. If we have that, we are good to go long. If we have broken below these lows, then price will dramatically crash from here. But for that, price need to break below these low for the price to get to the level below right here. So for now, just look at the bullish trades if we have that from this zone. Otherwise, just a pullback entry bearish I'm looking at until the price hit my level below. Next up, we have gold. Gold is nicely pushing down and broken below 50 EMA. Now for the next bearish entry, simply wait for the price to break below this little support. Not a support, just an anchor right here. Let it break below this anchor. Just for your visuals, you can also mark a little box here. Once we are broken below this box, we can see a pullback, bearish engulfer, and keep on taking short till we are in the level of support. I'm not buying until the price hit the level of support. I'm expecting a price to push down, head to this level. It's 2.2672 goes to 2685.43. Once we are in the zone, only then I'll start to look for my bullish entry with bullish engulfers or double bottom entry pattern. So not buying, only looking for sell trades. As now we are below 50 EMA, buy will only happen here or once we are broken above these highs. Here on silver, simply a level of support is about to hit, which is 31.42 goes to 32.19. Now once the price is inside the zone, forms bullish engulfers with double bottom, I'm going to go long. For now, we are below 50 and 20 EMA short term. If we have a pullback bearish engulfer, I'm going to go short till we are here. With the bullish engulfers with double bottom, I'm going to go long. So all I'm looking at condition, buy or sell. That is what I'm looking at. As now we are below 50 EMA. Currently, we are just looking for the bearish engulfing pattern to take over sell trades till we are here, and look for your buy trades from this area. Lastly, we have crude oil. It's now bouncing up from the level of support nicely from the double bottom pattern. Now, if you have seen my first part of the video, I've already shown you the crude oil entries, the zones as well. Feel free to check that out, rewind, and look at the timestamp in the description and in the timeline. Now, for crude oil, all I'm waiting for the price to either come back to my rejection zone, which is right here, a little yellow box, for the price to form a valid double bottom and a major double bottom pattern. If that happens, it is an area I'm paying attention for the possible buy trades here on Rwanda. Otherwise, let's say the price breaks above, I will only go for next buy trade if we are broken above 73.35. Once we are broken above 73.35, only then I'll look for my buy and continuation buy trades. For now, just wait till the price gets to this level here or till the price break above this level. So I'm not touching crude oil until these conditions form. So we can see some range for a couple of days before the price will decide to push up to continue or push down to continue to push lower. Now, if you're looking at capital.com, exactly the same. Wait for the price to break above these highs for the possible bullish entries, break below this lows for the bearish entries. But double bottom is also in the play right here. From here, if you have a bullish engulfing condition, I'm going to go long. I'll keep you guys informed as well once I see these conditions. That's it for commodities, guys. Hope you got a value. And if you've seen this video till end, you're a legend. Do let me know in the comment section. Hope you do it green. I'll see you guys in the next video. Have an awesome weekend. Take care.